Good morning, everyone, and welcome to the European crossover webinar. And we're seeing the dollar just make a little bit of a move right here. If we're looking here on the cash dollar index, and the euros ease back just a bit. Yesterday we were talking about that 1481 or 1480. I don't remember. Let's go and move this back here. There we go. Yeah, the 1480 with 1469 be key on the daily. 1499 was a possibility, but like I said, this 1480 was key here, and we did see the market pull back, and the key was could we close above this 1469 and this 1433. On the initial run did help, but we did go and take an earlier dip here. And we see the dollar going and make a fair pullback. One of the things that's hurting here is also we still happen to see this the oil continue to stay weak. We know that if you remember earlier in the week, I pointed out the 47.15 key on a weekly close for support. And at this point, we've certainly continued to work lower. Obviously, the woes that we've seen here continued woes here in the equities, especially when you look here with the S&Ps. It's just been just a tough row. And we did go get a little bit of a hammer here, but look, they haven't done very much with that at all whatsoever. Let's move this out of the way. So at least on the quick overview, cable has tried to move up a little bit higher, but not any real significant as trying to push out of the area where it's been here with cable. Aussie dollar continues to be relatively weak. Look at that. Even with the dollar paring back, this whole global growth story has really caught the market. Wow, look at the cash dollar index. Just a big little rip here, right? And with the oil, look, that's continued to weigh here, or inversely with the dollar CAD, continue to go and work higher. And boy, we are really scooting up here on this cash dollar index here, making quite the move. The dollar yen, boy, that was a big story yesterday. We had talked about, or I'd mentioned this 1175 being a key on a daily, and boy, they just slipped through this like a knife through butter here on the dollar yen. But we'll go and take a look at the news real quick. Not news, but the economic reports coming in. You can see right here with German confidence basically, came in line, but also when we look in here, we move a little bit lower. Italian business confidence, just a tad bit weaker. Also, French consumer spending. Remember when we looked at the PMIs in France, we also had on the PMIs, they were in contractionary mode this last week. So certainly things that would weigh on there, but the dollar trying to ease back a little bit, but we're starting to go in and come right back up here with the buck coming into the States here. We'll have durable goods, and we'll also have GDP, final GDP at 8:30 Eastern. Personal consumption is at 10 a.m. Eastern, and one moment. Final University of Michigan. With the close on Friday, and Fridays are always so important, I think this market obviously is a lot more concerned with what's going to happen with the S&Ps. But boy, look at this rip here. And certainly pulling back here with the euro. Let's go on and just jump in real quick onto the news. and just get a quick overview. But boy, it's been one kind of a tough week here. When the key to me, the key markets that have moved obviously is going to be the equities. Um, I thought that we'd be. I remember talking with this about Joe, but well, even a month ago, I think it was. Him and I were talking. I said, we're probably going to go on and make new lows because they're going to push them low, and I think this next drop is going to push out a lot of mutual investors. I think that at this point they'll end up throwing in the towel. One of the things we referenced it in was, if you remember a year ago, the same thing. We made some big key lows, but there's no way in heck that I thought we were going to have this kind of a fall. I didn't. This has just been something else, but I think it has run a lot of people out of Dodge, and obviously that's made its own impact with oil. And boy, all I can say is, who would have thunk it? The fall we've had. Remember, we were at 77.5 or almost $78, and look, who would have thought that you had this kind of a move? Even when we made the move down to in the lower 50s, we had a little bit of a support. Remember, at the time, I think we got as low as at the time it was like 52. And the market held at that time, and I think we rallied a couple of dollars or $2.50, and then we slumped. And boy, the equities have really taken its toll on this. A lot of people are blaming the Fed, but that may have exacerbated it here. But really, it's all about this whole thing with the row with China, and it's just fed on itself. It's one of those things like a rolling snowball. And before you know it, it gets so big you can't get out of the way, and certainly that's what's happened to it. And certainly the news with the Fed or whatever, all that's done is just gone to exacerbate the move. But I thought that Steve made a great point yesterday about the situation with the Russell 2000, and we're in a world of hurt. And I think it's almost inevitable we're going to go and get a pretty good slowdown. I would think here at this point. He's shaking a lot of confidence, I would think, looking forward, especially going into this first quarter. Probably get a pretty good little surprise. Yeah, be one moment. Nice little rebound back here, dollar index. Let's go and move on real quickly to the news. And since the Canadian dollar, obviously, this is really having its own tough time here. Look at this, and this is right here at 35. And this, like I said, even with the dollar being weak, we're still, moving hard with the Canadian dollar. And I know the concerns that, the Bank of Canada is really going to be holding back, but the biggest weight on this is obviously the oil market. We're going to move on to this real quickly, and then we'll get into the bias chart. Says the Canadian dollar was a little change against the greenback Thursday, but hit a 1.5-year low early in the session and underperformed other G10 currencies. Oil prices hit their lowest in more than a year on worries about the oversupply and the outlook for energy demand as the Federal Reserve rate increases the day before knocked the stock market. We had hit the pain threshold in oil, said Adam Button, chief currency analyst at Forex Live. Much of the Canadian oil patch underwater at these levels, and it's going to mean curtailment in production and investment. Earlier this month, the Bank of Canada expressed concern about the outlook for Canada's energy sector when it left its benchmark interest rate at 1 3/4. And that was actually a good call. I know some people were really upset at the time. I'm like, I don't know why people would be upset, because why should they step up and just take a bullet or take one for the team? It made no sense. And you're seeing now, obviously that came into fruition. They would look like a bunch of idiots if they had gone and made a move. And here we are, getting knocked about. So once again, it made sense to me for them not to take any action at that time. The central bank has hiked 5 times since July 2017, but bets on further tightening from the central bank crumbled after a policy announcement which was perceived as dovish. For the Bank of Canada, the conundrum is that backward-looking data is strong still, while forward indications for the market, such as commodities and some data, are weak. Button says Canadian wholesale trade increased by 1/10 in October from September. Separate form from the ADP showed that Canada added 39,100 jobs in November. Canadian gross domestic product and retail sales for October is due on Friday. Also on Friday, the Bank of Canada will release the winter issue of the Bank of the Business Outlook survey. And on to the Aussie and New Zealand dollars. Dump for yen, but bonds in demand. And boy, that move in the yen, that was something else. Like I said, one of the things I was looking at, I saw some, there was a key area there on the daily, but man, we went through that and just kept on sliding back. I guess I was going to say, obviously, when you look at the moves that we saw here in the S&P, certainly the safer bet, just keep on buying the yen. But boy, did it go right through that yen. That support, it went, that daily hold support just gave way. It says the Australian and New Zealand dollars were heading for steep weekly losses on the safe haven yen on Friday as a risk of a partial shutdown of the U.S. government piled pressure already on shaky equity markets. They fared a little better on the U.S. dollar, which had trouble of its own from political uncertainty to sharply lower treasury yields. The yen and the Swiss franc were the big gainers as President Trump refused to sign a bill funding the government setting up a last-minute showdown with Democrats in the Senate. That left the Aussie pinned at 79.21 Aussie yen, having shed 1% overnight, and it was now down almost 2.7% for the week. The Kiwi was off 2% for the week at 75.48 yen. The threat of a government shutdown over the Christmas came as investors were already fretting that the economy would not be able to withstand further rate rises from the Federal Reserve. That uncertainty helped the Aussie steady for the moment on the U.S. dollar. The Kiwi edged up to the 67.88. From a trough at 67.25 to leave it off at 1/10 for the week so far, and that was a relatively robust performance given the knock it took on Tuesday. The market estimates the RBNZ's policy have changed radically, said Marshall Gittler. On Tuesday, the market saw a 32% chance of a rate hike next year and no chance at all in a cut. Now it seems only a 3% chance of a rate hike next year and an 8% chance of a cut. Holy smokes here. And moving on to the dollar, we'll quickly get into this so we can get on to the bias chart. The dollar consolidated overnight losses on Friday, but we're seeing the dollar index come back as it sets for its biggest weekly drop in 10 months as threat of a U.S. government shutdown and lower bond yields on the back of concerns of slowing economic growth. I think the markets are focusing more now on the U.S. economy, specific risks that the global economy risks, and is weighing on the dollar, said Tulan Wen. Against a basket of rivals, the dollar was broadly steady at 96.24, although right now we've seen, look at this jump back. Nice jump back here. You talk about a good, almost a 30 pips. When they quote in the story, we're almost here kissing at the lows, and look, very nice sharp rebound here in the cash dollar index. Some liquidation of long dollar positions, one of the most crowded trades in the global markets, was also evident a day after the Federal Reserve raised policies and delivered an outlook that was less dovish than traders had anticipated. The safe haven Japanese yen benefited from the nervous sentiment, strengthening 0.2% against the dollar. Adding to pressure on the dollar was news that President Trump has refused to sign the legislation to fund the U.S. government unless he got the money for a border wall and risking a partial federal shutdown. So I guess he just wants to dig his heels in and just, the heck with anything else. Moving on to gold, and we did see, I mentioned, obviously the big movers for, let me move this back here. Obviously, one of the big movers that I didn't even mention here was the move that we saw here in gold. And boy, what a move we did going to get there here on gold. We had mentioned here about previously about the 1270. I think I mentioned that as the next move. Someone was asking in the chat room. Actually, I was looking at the XAU, but this is actually the Feb gold, but on a delay here. And here's the XAU here. Let's go and move on to that, though. Gold prices steadied on Friday, holding a firm near a 6-month high. Stuck in the previous session, the dollar remained under pressure due to a subdued outlook towards U.S. interest rates and the economy. One of the things we talked about over the last couple of weeks is gold was really looking forward to getting the handcuffs taken off. I think that when we got the FOMC and the lesson perceived dovish outlook that most expected, gold has started to pull back, and some people thought, okay, we're seeing this reversal. But don't forget, as I mentioned, gold wasn't even giving anything back. And so it had an okay amount to give back, but it did not come anywhere close to really truly pulling back. So yesterday, we made that push. But to be quite honest with you, as well as gold has done, I'm surprised it has not done better when you think about, we had talked about this even a couple of weeks ago as equities had started to move. I said, little by little, you're going to see retail investors move a little bit of assets into gold, and I thought that would provide a nice firm undertone. In light of where equities are right now, I'm surprised gold isn't actually knocking on the door at 1,300. And I'm not exaggerating. When you think about the move that we've seen here in equities, you would have thought here, gold has certainly, moved higher here, but put this here. I mean, look at this move. Okay, a nice little move. We're starting to work our way, but come on. As I mentioned here, are you kidding? That's what I'm saying. Look at this. I would have thought that when you look at the move, don't forget it isn't like gold just has been sitting at the bottom. We've had a nice chance to move higher. I would have thought we'd have jumped up here probably in light of what we are with S&P's, probably closer to 1,300. I mean, I'm actually a little bit disappointed we haven't seen a bigger move here. You'd have thought that you'd seen a lot more of a move into gold, and I thought that over the last couple of weeks we'd mentioned a nice little undertone bid. I thought on a move like this, you'd probably see us up here at 1,300. You'd probably be seeing a lot of talking heads saying people, next move in gold is 1,500. And, we haven't moved that much as I would have thought in light of the volatility or the downside move we've seen here in equities. Moving on, though, depreciating dollar coupled with the expectations of fewer rate hikes in 2019 remain the primary factor supporting gold prices. The Federal Reserve's failure to reassure investors that they underestimated the risk across the global market is often seen as fueling appetite for gold in the short term. With volatile equity markets accelerating the flight to safety, gold is likely to remain supported for the rest of 2018. Well, that's not saying much. Traders expect risk of sentiment on the very wobbly conditions entering the new year, said Stephen Ennis. The dollar's weakness against its Japanese yen has parked gold in a perfect spot for investors. Well, like I said, I mentioned Spire Gold, the world's largest gold-backed exchange, said its holdings fell one third of a percent to 769. Once again, I'm a bit surprised here that we haven't seen a bigger move here in gold per se when you think of what equities have done. We're going to move on to the bias chart. Now let's take a look here with the euro. And we're sliding back here in the euro. And we had talked about, there's that level we talked about on the daily when, and usually on Fridays we kind of take an overview of what all has translated or transpired over the week. Certainly have seen the dollar give back some of its gains, but we haven't ripped here in the euro. There was always the possibility, although the Fed, the FOMC wasn't as dovish or near as dovish as anyone would have expected. There could have been that possibility we had referenced before, 14.99 could have gone a stretch. But yesterday when we're looking at, we talked about 14.80 and the importance of 14.69 on a daily. And as I mentioned here, and we couldn't close the deal here on a daily close above 14.69. You're seeing the market pair back, and to me, I think it's just the market's feeling safer to stay. In this case, the dollar. Well, the dollar's already moving higher, so I don't think there's so much outright buying the dollar. I think it's just an evening up of positions before the end of the week. Why are you going to go on what's been a fairly concentrated buying the dollar into the end of the week. I think, to me, at least, I believe that's what's happening. And also, when you look at it, just the technicals, if you don't want to look at it as, okay, well, that's a fundamental look or whatever, then just go with the straight up technicals. Look, there's the daily close. We talked about it yesterday. That was our daily resistance that we had as a key marker. We don't mark those on all the pairs. You see that here. But if it's a key significant level from where a market's at, we're going to mark these off, and that's what we do with the asterisks, whether it's a daily key support level or a daily resistance level. Well, that's what 1469 was doing, and in order to get this upside, we needed this close above 1469. Had we got that daily close above 1469, then you could have been making a further move up here, probably challenging 15 3/4 for starters. But like I said, we couldn't close the deal, and henceforth we're starting to pare back a bit. So the 1469 is going to still stay steady, because at the beginning of next week, that's what it's going to take to get us moving. So now when we look at the 2-hour chart, let's see where we stand here. And this looks rather ugly. Now, for starters, support's going to come in on this initial run. You're looking at about 1424, right? Well, actually, we just got there. Look at that right there. See right here. Let's take a look here. Okay, there we go. You see that on a daily close? This is what it needs to defend, and that's your risk level. And I would think that that would hold 1393. You see that? Right there, 1393. So if you were looking at let's say you were long the euro, okay, or you buy the dip, when there you definitely want them to defend is 1393. If the market, we get some dollar bullishness towards the end of the New York session, and let's say you're short the euro, this is, if you're trying to go for all she's worth, 1393. I look for that support to come in right there, 1393. It's going to be a key daily here. Let's go and mark that. And we are continuing to slide here. We are continuing to slide. Let's take a look here. When we look here on the 2-hour, $13.96. That's right. 13.97. And this does not look good, but I think that it's easier for them to ease back, and we may just go on and garner some momentum here. So it's going to be 13.97. Seems like a long ways off, but you can see the momentum shifting. Hang on. And I think it's important, like I said, that we weren't able to close the deal at 1469 above that, and now the market's kind of got a little bit of a whiff. You can look and see as it continues to go on and slide back here. Initially on first blush right here, if you're short right here, look right here for support coming in here at 1416. 1416. But before it's all said and done, I think they may want to make this trek here. Some traders are a little bit concerned here. This dollar's making its run for all it's worth. Look at this. $96.66. And we're not that far away. which might get us once again, like I told you. Look at that, we're already 1450. Boy, they're really shedding it right here with the euro.
Hey, Paulie.
We did get this exponential sell right here on the 5 minute, and that would have come in. Let's see, right there, right here as we broke here. So at 14, right there, 1450, we got the sell signal. One of the things that I did want to go in and reference here. We were here, look at this 1414, and we had this support and this nice little overshoot right there at 1416. So if you've been short, this is a good little area right here to really tighten up those stops. But like I said, I think we can push as low as potentially, and it seems initially, now it doesn't seem that far away. I'm talking about the 1397 we see on the 2H, with 1393 being huge on the daily, which I'd like to, I'll go on and step in and buy against that, even if it gets a little bit scarier here. One of the things that some people had mentioned, they had some in the chat room late in the afternoon, they've had some difficulty with their trading, or they haven't had much success. And, you know, when Blake had that interview with that one gentleman, he said that, you know, FX is the last 18 months or so have been very, very tough. Blake has said the same thing. Other people have made comments. Same thing to me. It's been very good. Look at this. We're already at 12. Same thing has been difficult. One of the things that I had focused on just recently also, and I didn't used to use them, I hadn't used them, got away from them for a while, has been using the exponential moving averages, only because some of these moves, case in point, look at the euro, don't last very long. Like I said, it almost seems like it's 3 steps forward, 2 steps back, or 2 steps forward, 1 step back. You just, you know, before you start to think you got a market going one way, before you know it, it loses its juice. And so one of the things that have helped me, now I go with pretty much as you see here, I go with just, and not so much patterns, but I go with levels. All of my levels are pretty much horizontal levels. I don't really use trend lines unless I see a market starting to break, you know, in a certain way. And I use the exponential moving average. This kind of gets me on a very short-term basis, because most of my trades are all short-term, although I have to admit, did a pretty stupid trade here on the dollar cat. Actually, stupid in the sense that even I jumped out of it a couple of times and made a couple of nickels. But on this last trade, I had 2 different opportunities jump out with an okay amount of gains, considering I'm a short-term trader, and I ended up hanging on. And my own fault, because I got a little bit too greedy, because I'm thinking, oh, well, why would I get out at that point when I think it could even go lower? But I'm still going to go and hang on to this, because I think the moves in the oil are just exceptionally overdone. And it's not that big of a position, but I'm certainly not too happy with that. But that being said, the one thing that's helped me with the exponential moving averages, I use this here on the 30-minute. I do use a 9 and a 27. And it's, you know, if you look at it, it's, for different markets, it's help me stay in tune with at least where the short-term momentum is. And I've used it here on the 5-minute. I'll use it when, I'll give you a good example here, and then we'll move on. And my point being is that I think all of us, what you have to do is you have to have a process in place. It's going to be different things for different people. Some people focus on the long term or medium term. Me, I'm just a short term trader, and the gentleman who spoke with Blake at the time says you got to figure out what type of a trader you are. Are you trading off of 4-hour or 2-hour charts? Are you a 30-minute trader? Are you a 5-minute trader? And you can't be what you're not. And quite often, we've sometimes found ourselves, I probably found myself that way with the dollar cat also, is that, you know, if something looks good, then you rationalize it that, okay, well, it's not good on, well, I thought it was good on the 30-minute. Now let me look. Okay, it still looks like it's good on the 2-hour / 4-hour, or, well, okay, it's not, it's kind of invalidating what I saw there, but on the daily, it still looks good. But I think as far as having a process in place, find out what works for you. Sometimes the best way to go is just move on to back away, to see things from a little bit larger time frame, and also find something that works for you that seems to be very comfortable. Here, you know, speaking of which, look, here's those exponential moving averages on the 2-hour, and you can see, you know, what the heck am I doing short this market when everything keeps pointing towards, you know, moving higher, which is easier for markets trending. It seems to make sense. But on a short-term basis, I use them on the 30-minute. But find a process that will whatever you use, that seems to match your sentiment or your risk tolerances, and see if you can't get some type of confluence, which is what I do. I use a little bit of confluence when I'm looking at different markets. Obviously, not doing the best of thing with the way the Canadian dollar is with the oil, but what I try and do is find something that which, like I said, the last couple of months were difficult. So I went back to using moving averages, and that's helped me, exponential moving averages, because I'm thinking, as I told you, hey, these markets are 3 steps forward, 2 steps back. A move barely gets started, and it turns and gives back its own. So this kind of gets me to stay in tune with the market as far as momentum standpoint, but still sticking to mainly just use it for the most part going off a 30-minute charts. I use a 2-hour to get my longer term perspective. I don't go with a 4-hour, but I just want to touch base on that. So I hope that didn't seem like all random and all over the place. Let's go on and get back once again with the euro. So I was telling you about that 14.16 right here. You see that right here, 14.16. You can see they overshot it. Now they've already bounced back to 14.22. Like I said, even if we rally back, they may want to come back a little bit lower and test it. But if you've been short, that was a good area right there. Like I said, that 14.16, they overshot it by what? 3.5 pips, and now we've already jumped back to 14.22. So let's get back. Just want to go and make a note on that. So sorry if I got back, it sounded a little bit random there. Let's go move this here. Now, as far as resistance, let's go and get onto that now. Right now, resistance looks right here at 14.45. 14.45. We'll take a look at it here on the 30-minute. And right there. And you see, to me, it's all about the closes on these bars. As I said, I never, unless you're in a situation where you're day trading / scalping an event, obviously FOMC, that's where you'll go off of the actual high and the low. But for me, like I tell you, it's always about the touches and also the closing bar, which is what I go by, whether it's a 30-minute or 5-minute or a 2-hour. So you can see right here, this would be key for them to get above it. It's 14.44. Okay. Well, we got this one bar here coming across. So really on that, we put it right there, 14.45. So that's going to be our resistance for today, 14.45. And the key will be that daily close above 14.69. Certainly doesn't look like it's going to make its way yet on that. Let's go and move into the cable, and we'll get clipping along here. I spent a little bit of time talking about having a process in place, but I think that it is important. I mean, it seems pretty basic, I guess, but sometimes it's good to go in and revise or re-look over things, especially we have to go with what the market is willing to give us. So if you're mainly a trend trader and you're trading in a volatile market, you're going to have a tough time. You have to adjust, at least on a short-term basis, to what the market's willing to give you if we're in that type of a market. What I've seen in FX is, like I told you, is these moves just don't seem to last. And the gentleman speaking to Blake said the same thing when he was saying, "Hey, look, it's hard to go with breakouts because the algos want to take the other side." Well, like I said, what I've noticed is the moves don't last long. So I said, I need to move to something that's going to allow me to be a lot more flexible or start to see momentum changing. That's why I went back with the exponential moving averages using the 30-minute and then also with the 5-minute. Let's go move into the cable. Enough of that. Obviously, my process, or the way I look at it, probably not going to make much a hell of beans of sense to someone who trades from a longer term perspective. But for me, as a short term, that's what works for me. As Blake always likes to say, many ways to skin a cat, many ways to try and make money in the markets. So let's go and move on here with the cable. Here's that key level that I mentioned about before also. Right there, the 27.14/16. I guess we might have 27.16. Has not been able to go in and take that out, and that's where the rubber meets the road on a daily basis. And we may not see that till next week, but it's going to be key there. Can we get past 27.16 on a daily? And we've got that right here. Let's go and take a look now for the day's resistance. We're still holding up pretty well here with the cable. Still holding up very well. This would be key too if we can just get past 26.57 on a daily close. We're still hanging around that. My X is a little bit of a resistance, but the rubber meets the road at 27.16. This market's been beat up so bad, boy, it's really hanging on here. Resistance on a short-term basis, it's just too close right there. It's right there. 26.94, which they just took it out on this move by about what, 3 pips or 3.5 pips, and we started to slide back. So once again, you can see that going back with the close right here, touches. That's the extreme little push here, but this is where you're looking at it for the day, 26.94. And I'm leaving this 27.16 in place because, like I said, if we do finish out, start next week, push a little bit higher, this is where it's going to be key if we can get above that 27.16. Support here on the cable. We've held up very, very well. Support, it's pretty clear there where they could go to. But I think right now, people are just getting knocked about on a very short-term basis here. But the first real support is going to come in right there. We'll actually move it just a little bit lower. See this coming across here? That comes across these highs also. Short-term basis is going to be 26.31 here on the cable. Let's go and move into the Aussie. World of hurt here in the Aussie. Things are looking not so well here for the Aussie. And we had even talked here, if you look here, this is our key daily support was 71. And we've broken below that. So let's take a look here. You know, it's hard to believe that, you know, it was just only a couple weeks we were looking pretty good here as the Aussie started to break. And here we are revisiting these lows. Really tough times. Key support on the daily is right there. 70, right there. 70.53. 70.53 on the daily. We're coming to the end of the year, so I don't know about this market breaking to. I don't want to necessarily look at this point for key brand new lows. Let the market, I don't want to say shake itself out, but I wouldn't necessarily be chasing something at this point. If it gets even lower, and I'm not saying that we can't move down there at 70.53, and it may sit there and languish and even push. Now that's not the low lows, but try and push a little bit lower even further. But for now, I would not be chasing this thing. I think market, the same thing we talked about the cash dollar index. It's easier for the people to just go in and go, you know what, I'll just finish the year, just not finish the year, but finish the week, just staying with the dollar, I guess. Or they're you know what, I'm not going to step ahead and buy the euro yet. We are here at 14.22. I'll take a gander there at that 13.93 on the daily, 13.97/2 hour. But I can see where people are looking in that direction here. And things look certainly pretty woeful here with the Aussie. Let's go on and take a look here on the 2 hour chart for resistance. Resistance pretty clear as a bell right there, 71.06. 71.06. Really would be higher here, but things are looking so woeful. I don't even see anyone stepping ahead and saying, let me go and push this further. So short-term basis, we'll go 71.07. Let's get clipping along here. Pretty important getting past this 71. Let's go move on to the Kiwi. Need to make up some time. Well, one of the things that we covered in the news is, and someone, when we talk about the news, I was mentioned to some gentlemen yesterday, is the reason we cover the news is because it sets the tone for the day or the week. So if you're wondering, well, God, looks like we have kind of looks like a little bit of a mini hammer here, and then Kiwi, why is it pushing lower? Well, we just showed that was that uh, the gentleman was saying the complexion has changed. We've gone from a point of looking for potentially a what was it, a 32% chance of a rate hike as we came into this year. That's dropped all the way down to 8%. And now I think it was a 3% or 5% of an actual rate cut. Hence, you can see why now, obviously, you're looking into this downside momentum, at least for the day here, pushing what looked like, wow, we've had a pretty good fall from here. Looks like we have even close to a hammer bottom. Wait a minute, why are we dipping here? So obviously, that's going to have play into the woes. Key support here on the daily is going to be right there. 67.08. Let's mark this off. Moving to the 2 hour. Same thing with the same thing I'm looking at, the same way I was looking at here with the Aussie. You would look, where's the real support? You think, okay, right there. But as we come in today, the downside momentum is really garnered some steam. Even if they get some short covering, and we'll actually go right across here. See here, above here, but just a little bit right here, is going to come in right there at 67.57, which isn't even that far away if you think about it. But that's where, even on the pushback, people, if we were to start to see some buying, anyone who tried to play the buy side on the way back up would be looking to get out right there, 67.66. Move on to the CAD. Someone's asking me about this because I made a reference about the weekly chart, and my point being was, let me go back to this. Remember the day that we had the NFP and also Canadian employment, and that was this marker here, and everything. Okay, now the Canadian dollar is ready to go down to probably 132, if not 130. And when you looked in here and you had, looked like almost like a gravestone doji. I mean, the wick wasn't long enough for a shooting star, but although on that day there was so much volatility. But my point being is when it looked bearish like that, let's go to the weekly. The weekly, even when it finished lower, remember, see, I pointed out, we had taken out these highs. So that even though it looked terrible on the daily on that Friday, look, the weekly had taken out these highs here. So you see right here, even if we had finished lower, we had taken out these highs. So it was still up and away on the balloon. And certainly further than what I thought here. We are some key resistance. We'll see what happens. That's 30. I marked it as 35.12, I think before. There it is. Yeah, 30. It is 35.12. So that's still key daily resistance. Let's see what this thing is. I think Steve is talking about 35.50 to 136, and it could. Obviously, the woes and crude has certainly had its impact. So 35.12 still stays on the marker for now. We can even push this back, and there's that 35.12 coming across. You see, you can make a little bit of case just above here, which would be 35.20, which is where we're at right now. So actually on the daily, that is at 35.20, and the 35.12 was that first knockabout right there. This 35.20. So we'll put it 35.20 and update that. Sure would like to think that was the high. That's where I'm stuck short right now. Although I think that the cable, the CAD should probably even be stronger in light of where we are with the with crude. Moving on to support. On a short-term basis, I'd like to think it's lower. Look at this, 25.23. On a short-term basis, it's going to be right there at 34, 34.84, right there. That'll be support. The concerns here, and we covered the same thing in the news, is that the energy sector, as Adam Button was saying, right here is not only the oversupply, but as they were stating right here, is the whole energy sector is underwater. Hey, here we go. We hit the pain threshold, said Adam Button. Much of the Canadian oil patch goes underwater at these levels, and it's going to mean curtailment in production and investment. That certainly weighs on that, and certainly we're seeing that push, even further here in the dollar CAD. I think once we can get oil to settle down, but may not be for a little while. But unfortunately, like I said, it's a small position I have, and I was able to dance out a couple of times on trades. I should have danced out the last time. I think I'm kind of upset with myself. Like I said, the gentleman said, you got to know what type of trader you are. Twice I was in the okay money here on this, and I just didn't take the trade. I got selfish. Oh, well, no, I'll get paid more. Well, I should have. But I should have just gone and kept on dancing in and out, considering, as I said, that we're still in a buy mode. And let me give you a good case in point here when I talk about the exponential moving averages, is generally when you see like a little fake out signal here and move, generally means you're going to get a further extended move, because anybody that played it short from here, they're forced to go and jump right back out. So usually when you see like a dip like this, and then you see the market research, it usually goes for another extended move. Obviously not good for me. So that covers the Canadian dollar here. And let's go and move on to the Swissy. Like I said, we're really pressing against time. I got to yammering, but I thought it was important to point out those things. Moment. Oh, you can see here, I'm just looking here on the weekly. Look at that. A little bearish engulfing right here, but we're actually looking on the daily. I mean, I was looking at we want to focus on the daily. I was looking on that weekly when we look at the Canadian. Getting back here for support here on the daily. Look at that key level of daily support actually coming right there. 98.59, key daily support level, 98.59. Yeah, resistance is going to come in right there at 99.05. 99.05 short-term basis here. Oh, that's what we had, 99.05. Let's go and quickly move into the end. We really got to make up some time now. Now, as a short-term trader, sometimes it helps. Sometimes I'm able to dance around quickly. I did that yesterday when actually it was long the euro at 32, and then I added at 14. It was 14.03, 14.04. I basically caught just at the bottom, but I did show on the 5-minute chart that it came in right there at support, and sometimes that looks good. But but sometimes you lose a bigger perspective. sometimes with that. And we talked about the 1175 being a key daily support level. And I think Steve got short like around, I think it was like, I saw it from the day before, something like 1230 or something like that. And, you know, on a short-term basis, yeah, I was even making the case, wow, look at this 1175 here. That's a good area right there. Right there is 1175. And the market kind of held in that area. I mean, we got to like 1170 and we're just holding there. But then, of course, obviously, equities made that push lower. But that's what I'm saying. You have to know what kind of trader you are. And, but like I said, focusing me being a short-term trader, you can see, well, God, as we broke through this, the pressure really remained, especially as equities continue to fall. And we certainly made this push lower and remain lower. So it broke well past that 1175. So we're looking at here on the daily basis, where does that next level support come in? Comes in right there here, which is now 1075, a good 100 pips lower. I want to bring this up. Being a short-term trader can work for you, and sometimes it can also work against you. Not necessarily against you, but you have to keep in mind these other time frames as you break beyond past that. Let's go and take a look on far as resistance. It's going to be right there, 1171. 1171. So if we were to get a bounce back in equities, I don't expect that today, but I'm saying let's say start next week, that'd be your first right there. 11. What's actually 1172? This would be good opportunity to, I was just going to say right here, where you can use the exponential moving averages. You know, remember we just talked about that. You see, look how long this has been on a sell mode since right up here, 1344. Because look here, it never crossed above it. It just kissed it. So you would just still stay short, and look, remember what I told you about is when you get a little fake out here, what happens is anybody that gets long, then they can quickly get underwater. When you get this break back below to resume the trend, because look, it got short from right here at 1344. Stayed short. It was just kissing it. Never went above it. When it got above it, anybody that bought in here, they quickly find themselves underwater as we break lower in the momentum. And therefore, so generally when you get this little fake out like this, then you usually see an extended momentum. Now you can make the case, oh, well, the reason it's doing that is because of equities. Look, for those of you who just say, I don't care about news, I just care about the technicals. Well, there's your technicals right there. Like I said, and you know, case in point here is that's why I like using the exponential moving averages. Kind of keeps me on the safe side of the market, because sometimes I would find myself, oh wow, this is a great area to buy. Let me buy it right here, and then the market just keeps going lower and lower. This is where it keeps me in check. That's why I like the idea about the exponential moving averages. Why I wanted to share that, and then we were talking about having some type of process. Use whatever you want. I don't use RSI or stochastics, but like I said, use what you want if that works best for you. But I'm saying this is what keeps me kind of in check, or allows me to not only gauge the momentum, but not get myself in trouble like, okay, here's some support, I'll buy it right there. And then the market's like, wait a minute, we're already in the sell mode. What are you doing here? You know, so now we saw that yesterday, like with the euro, but we'd come into some key support at the time. And the euro from a medium term basis was already on a buy. But anyway, let's go on and move further off. I keep going on a little bit of a tangent on these things, but trying to be a little bit helpful to some of y'all that made some comments of having some difficulty in FX, or people. One of the gentlemen was saying, hey, I've been trading for a year and a half and I'm still not really making any money. I'm barely even at break even. But it's been, like I said, a tough, challenging year. Let's go on. And if anyone has any questions or whatever, don't hesitate. I'm willing to reach out and share. I thought, you know what, I'll just not say anything, and then I'll make a reference to some of these, or as far as process when we got here into the webinar. Let's go on and move on. I keep telling myself I'm running out of time, but I keep on yammering. Let's go move on to the cash dollar index. All right, one moment. Oh, okay. You know what? But we're already past that. Steve had mentioned about the UK GDP in 5 minutes, if you want to cover that. Well, we didn't see much of it, and thank you for that, Steve. I apologize, I missed that. I had the Skype open, I didn't see it. We certainly didn't get much of a move here. You see here, but well, what we talked about is, which we did have, our resistance was 26.94, and the high for the move was 26.95. Okay, look, you see right there? So there's a high, 26.95 or 26.96, and our resistance before we went into the port, 26.94. So we're just, and right now, that doesn't surprise me, because right now we're essentially just grinding it right here. You see here? Yeah, I apologize, I missed it. I'm not even used to being up at this time. I used to get up super early. Used to get up, actually I'd get up at the time getting up is normally when I would get up, or even about 45 minutes even earlier than that. So now I'm trying to get myself not only used to, and you can see this little, look at this on the 2-hour chart. See this gravestone doji? Now that's a gravestone doji, and look, the market came apart right afterwards. I just haven't been following the cable much, but look here, look at that. But I think we're just grinding because we're in this range, and as you come into Friday, there's no real need to stick your neck out. And I'm thinking to me, myself as a trader, or put myself in their shoes, why stick your neck? So you play out the ranges, you get above that. You see how you took out this high? And look, there's the high, 26.90. It was actually 26.97. Today's bias chart support, 26.94. We only kept the 27.16 because I'm thinking next week, if we can get past that, that's where the rubber meets the road. We could change things around. So, but thanks for advising me about that, Steve. Sorry to actually miss that at the time, but it didn't certainly look like it would have made that much of a change here. Let's go into the cash dollar index now. There we go. You can see here, here's a good case in point here at the cash dollar index. Here I go back all over again, but you see here how we've been on a sell mode. So on this rally back up, you look for any resistance here. There's resistance 67. You could kind of fade against that if it had jumped at that. We haven't. But let's go on and quickly move into so we can get this analysis done. So looking here on the daily, obviously big event was that FOMC. Key daily close right now is going to be right there, 96.71. Actually, when the market ran out of gas yesterday, remember when I was looking at that, I was telling you, I think it was making 96.71 at the time when the euro got to, was it 1403 or 1402, something like that. Anyway, let's get with it. 96.72 is going to be your resistance on a daily for right now. We already come to some key daily support. Remember, we had that in place even on FOMC date, 96.20, 96.21 here. And I think the market got, at the time it was at 20 or something. We saw right now coming a little bit lower though. So looking here on the cash dollar index, 2-hour support is going to actually be there at 27. If it were to push lower, it doesn't look like, certainly looks like we've changed momentum the same way we've done with the euro. One of the reasons, not to go hark back on that again, but once again, why use those exponential moving averages? Once again, like I told you, 3 steps forward, 2 steps back, 2 steps back, 1 step forward. I mean, it just seems like these moves don't last very long. So hence why some of us are getting knocked about and getting stopped out. By the time you get long, the market ran out of gas, it's heading back the next direction. You get stopped out, and then it reasserts itself back to long. And why I think using exponential moving averages on the short-term basis helps, or at least it's helped me. Support, as I said, 96.27, so no real change there. Here's that 21 as a key daily. We'll keep that here. Here's 27. Let's go and move into XAU, gold. As I mentioned earlier, this is one market that hasn't surprised me, except in a sense more disappointed, because as I told you before, when you look at it, you're like, wow, we're really getting going. Finally, we got something going here. But come on, folks, when you think about what's happening in the S&Ps, I mentioned it a couple of weeks ago. I said, hey, I think we're gonna really can move here on gold. We can really get going because there's a nice undertone bid because of what's happening in the S&Ps. But I'm surprised. I really am here because, as I mentioned, it wasn't like gold's been making new lows. Gold's been holding steady, and now you got the Fed take the handcuffs off. And I'm very, very surprised that we aren't at least right there at 1289. Almost a good $30 high. I'm really surprised. I mean, I thought we would have seen this rip up. I know people were amazed by what happened on Fed Day, and I didn't think it was that big of a deal because we had, the market had getting going. We've been covering this closely, although we're looking at the futures at the time. Covering this very closely, and the market just kept powering and powering higher and powering higher. Not maybe it's not powering higher, but it would just keep that bid, and it was relentless. It wouldn't come back. So when we gave back on FOMC day, I didn't think we gave back that much because the market could have given it. Look at this, could have given a whole heck of a lot more. I mean, we could have easily and not even messed anything up. We could have come down to that 1232, and we had that before support, and so we didn't even come that close to it. And then look, then we came back. I think we fooled some people on this move yesterday. And to me, I thought, I'm surprised it's not a whole heck of a lot higher line of equities. Anyway, here I go yammering again. But anyway, so resistance right now comes in right there, 1271. Let's take a look on this support here. Right here, 1256, 1256, 1256. Now, 1271's on the daily. That's where it can go to. And actually, we're looking at the futures. Doggone it. Let's see. Let's move this back. That's an area we had talked about. So let's make sure we're all on the same page. On the XAU, it's actually 12. Well, not that far away. 1269. Good thing I don't have Dale in front of me. We've already gone past. So hang on one moment. I guess this is the extended European crossover. Support here is going to come in right there, 1254. Let's go with the 30-year bond. Boy, we've really shed off quite a bit here in the bonds. So in the bonds, resistance comes in right there at 4505. Which was support yesterday. So one market I look at on a 4-hour. And this is going to happen today, I don't think, but if we start to see some money come back in the S&Ps next week, it's going to be 43.22. Let's go with the button real quickly. 62.98 here on the buns for resistance. Actually, 62.99. And 62.67. 62.67. And the DAX really kissing the lows here. Right there. Whew. I don't know if it'll get down there, but I guess anything's possible. It's 10,425. Especially to close out the week. But that's some good support there, 10,425. With resistance. $10,629. And that is the bias chart for the week. We'll get this posted, and thanks for joining us here on the European Crossover webinar.